Good weekend to you. This is Doc Severson for the ReadySetCrypto OMNIA trade of the day for Sunday, the 15th of November. Today it looks like we have a market which is consolidating because we don't really see much of anything moving. Even stuff that's moving to the downside is not moving all that much to the downside right now. So we don't really have accumulation nor distribution. This is a market which is just stalling for the weekend. And it seems to make sense with what's going on with all the other assets that are out there in the financial space. So I would assume the biggest problem to solve for many people is it seems like Bitcoin is running out of the gate right now, and this does seem to be a breakout of this North Star pattern that we have. This is the monthly log chart. We're getting that breakout from this consolidation pattern. We have waited for over 3 years for this thing to occur. So if you're watching this, you may be wondering, like, okay, how do I get back on the train? What assets do I go after? Things like that. So this is what we're going to address in today's video. Our first task for this is to understand what the expected move is into the end of November, the 27th of November, which is coming up very soon, as well as the 25th of December. So this shows us what options traders are willing to bet going forward in terms of their purchase of puts and calls. This creates a statistical distribution going forward, which generally relates to about a 1 standard deviation move up or down. Okay, what that means is that the zones that we're going to derive from looking at the option chain is going to give us about a 68.2% probability of the forward price movement, and that's a forward-looking indication. And the expected move going into 27th of November is plus and minus 1,290 points. Still pretty big for less than a 2-week move. That's going to give us an upper target to that of 17,340. 17,340, we'll move it up to there or pretty close to that level. And the lower edge of that statistical probability is going to be 14,760. So we're going to have to move this one up significantly. There we go. And we'll set that for today. And there is our statistical distribution for the next 2 weeks. Now let's set up the expected move for the end of December. This is for 25 December. We have an expected move of 2440 points, which is very close to what we had last week. Last week, we only had 2480. So we really have not lost that much over the course of 1 week. The upper level of this gives us, the top level is 18,490. 18,490. So we're going to have to move that up there. That's pretty close. Okay. And the bottom level of this statistical distribution is going to be 13,610. 13,610. So you can see that we're just moving it sort of up a little bit. And we're going to move that out to today. And there we go. There's our distribution, and they map each other pretty well, right? So it appears to be pretty linear in terms of the distribution and decay over the course of the next month or so. Now, what we want to do is we want to add one more thing. So this is a non-technical distribution. There is no technical analysis to this. Now, what I want to do is add a little bit of TA to this. I want to add the volume profile. And the volume profile is going to show where we've had the most trading activity at what price in terms of volume. And eventually this will draw itself out. There we go. And what we're looking for here is we're looking for clusters. And clusters indicate support and resistance. So we have a high volume node showing up right around the 15,000 level. So what this means is that the price is likely to get hung up down in this area before it distributes any further. Also, we have another node which is going to be focused right around the 13,000, say 400 to 500 area. Somewhere in this area, you can see how much trading has taken place in this level. Moves like this, where we have this big green candle, they do not provide support or resistance. So if the price gets down through this level here, just about 15,000, then it's going to cruise right here all the way down to about 14,000. So we can use that to our advantage, that piece of knowledge. And then obviously we have a huge volume profile with what's called the point of control all the way down here at 11,391. So this is just for this sample of time that I'm looking at. If I scrunch this up and look at more, we're going to see a different set of nodes that are on here. But I really don't care about anything that's happening except for the recent history of this move here. So again, the question is, where would we want to pick up inventory on any kind of a pullback? And to me, if we do have a pullback that occurs over the next few weeks into December, to me, it's right here at this level, 14,000. So to me, what represents value on this chart is waiting for the price to pull back to about 14,000. Now we can also add some additional technical capabilities to this, or data points, I should say. If we add fib retracements to this, if we just take this entire swing, which starts down here, and take it all the way to the top, we can see that the 38.2 retracement, the 38.2% retracement falls right in at 14,000. So to me, 14,000 is the number. If we get the price to either come down to 14,000, we should look to accumulate, or there's other things that we can do as well, such as selling option puts. Let's look at this through a couple of different tools. First of all, I'll bring up Deribit. So Deribit is a company which operates in the European Union and does not allow US customers on it. So here's one way that we could play this. We could say, all right, I want to look at the 25 December options. Quite honestly, these options that are, like 27 November and 4 December, these are just too short dated. We may even have to come to 29 January. We'll look at that in a minute though. But if we focus on that strike price, that 14,000 strike price that we saw, what we see is that we can get approximately, let's just say that we were able to pull in 380. So we're able to negotiate $380 against this. And we sold one contract. So if you divide 380 by 14,000, we'll just say 14K there, this equals to 2.7%. So there's a 2.7% return on capital for this particular trade, which is available. Now this will increase, and the credits will increase if the price actually starts to pull down towards the 14,000 level. So right now it's sitting at 16,000 and it's very, very flat. But if the price starts to pull down, these numbers will go up because these are puts. And so if the price goes down, the value of these puts will go up. Here's the deal with these puts. These are cash settled. So if you sell these puts, then what's going to happen on expiration day, which is 25 December, is either the puts will expire out of the money. So you keep that, in this case, the $380, or the amount of BTC, which is here. So you keep that, and that increments into your account, and you want to return from that, right? So that's a winning trade. Now, if it goes below there, they're just going to take the cash difference between what you sold and what BTC is worth that particular day. So if it drops 12 to 12,000 versus the US dollar, that could be significant loss. That could be a loss of $2,000 minus the 380. And there's no second act with these, unless you roll them down, unless you close them and roll them down, or some other type of active defense to that. That's it for the trade. Now what I want to do is to go to Ledger X. So Ledger X is out there and services US only customers. Now what's different here is that apart from who they service, these are physically settled options. So if we go out to 20 December, and in this case, these are going to be 18th of December, so not the 25th, but the 18th of December. And if we sell a contract's worth of this, we will get at least 525. Now we can negotiate somewhere in that space. And we might be able to get as much as 550 or so. This is actually a little bit rare that the premiums are a little bit fatter within Ledger X than they are in Deribit. That's interesting. But anyway, so we can get a return. Now, here's the deal is if the price comes down to, let's just say the price is up here at 16K. And if the price comes down to 14K, 14,000 or lower by the 18th of December, then guess what? You get assigned a BTC, one BTC. And that's if you sell one contract of this. So you got to have at least 14,000 in the account to be able to accept the assignment. But that is physically settled. You actually get that asset assigned to you in your account. So what's good about this is that this is a way to acquire. This is a way to stack Satoshis, if you will. And basically what you're doing is you're getting paid for this pullback. You're getting paid this amount for committing to buy it at that level. So this is a way where you can either acquire on a pullback or just get paid for it. If the price just goes sideways or even up, you keep that 525 and you just keep on moving. You do it again in January. You do it again in February, right? So this is a great strategy. This is what we call part of the wheel strategy as well too, where you're selling cash secured puts constantly until you get assigned. And then what you can do is you can turn around and write calls at it. Calls are over here. And if you owned a BTC, you could sell the $20,000 calls and earn this. So these are out of the money and you wouldn't have to surrender your BTC unless the price was above 20,000. Again, you can always roll the position out. There's ways that you can defend against this. So bottom line here is if you're sitting on the sideline and you're watching this rally go by without you, if you're watching the rally go by without you, there's ways that you can get on board and not chase the market. The worst thing you can do right now is to chase after this and just jump on board. So it might have worked for you at one point, but eventually this will catch up for you, chasing after a market, which is we're pretty close to exhaustion here and we are at exhaustion in the weekly chart. So we should get some type of reaction from this on BTC as well as many other assets in the near future. We just don't normally trade to the upside for 6, 7, 8 weeks in a row like this. So we're going to get a reaction that's very normal for this. And you don't want to be holding the bag up at the top. You want to be looking to buy in the pullback or sell puts on the pullback and use the same techniques that the pros are using. All right, folks, that is it for this weekend's report. You guys have a great rest of your Sunday. We'll see you back here on Monday. Take care.